Uh, Hello, good evening, everyone. I hope I'm audible. Myself, Loveless Sharma, and we will be just starting off this webinar in a minute. Let other people come in because I'm seeing a lot of people are coming in, so it's a bit 3 or 4 minutes late. But let's give them a minute or two so that we can start. Right, I think that is it. Good evening, everyone, and I hope you guys have found your Monday motivation. So as I. This webinar today is focused on basically a seminar which we held on back in January, and it was on trading the trends 2018 stock sector as an outlook. So we thought of actually doing a follow up because a lot of things change over a period of time, and specifically when you talk about market, I mean. Anyone who has been there into the market can know what I'm talking about. I mean, there was a decent correction in the market, and all being said and done, and we are back to some good levels, and there is a mild recovery into the market. So this is a follow-up webinar. If you have any questions, if you have any queries related to what I'm saying, what I'm speaking, or any particular doubt or any particular query related to any of the stock or market or FX pair, anything, you can post it right here in the chat box. You can see on the right side of your computer screen monitor, and I'll be getting back to you after this webinar. And basically, the idea behind this webinar is that we needed to address every investor who attended it, and even there are people who weren't. Who tried but couldn't be part of it. So there was a lot of information that was being shared. So this was basically focused on Malaysian markets and KLSE. Though if any, I see many people from Singapore as well. So I'll try to cover that market, in the later half. First, we are done with KLSE. So this particular webinar focuses on trading 2018. So I'll let you go through the slides which we have, which I've presented back there, and um, you'll get the basic idea, and the plot building will be there, so you can understand what we are talking about, and you can actually understand and get into the rhythm, so that we are on a same level playing field. And then we'll move forward in the present scenario. So it's like we're gonna analyze what happened in the past and what we had a view about of the market, and then what is the present and where do we go from here. So yes, I'll be discussing few stocks as well. Okay, so this is about me basically, and about myself. And been there for more than a decade now, and being covered by a few of the leading national televisions here in Asia, and in India as well. And I've been into the market quite some time, and of course, it all starts with initial losses. So back in 2006, 2005, I've had those kind of things as well. But then, yes, I developed myself into the field, and then now uh, it's been a great, you know, um, experience, and these are some of the clips that we have, here in India, and I share my views on basically ETFs, different markets, FX, equities, and my domain is basically equity. But then I have expanded and outgrown myself out of equity to FX markets and Singapore and Malaysian equity markets. So that is about me, and let's move on to the basic, very basic thing, that if you're not the man who has practiced 10,000 kick once, but if you're the man who has practiced one kick 10,000 times. I mean, this was the basic idea that I try to give every investor, every trader. If you are a trader or if you're an investor who's been to the market, see the basic um, how would you decipher this slide is I would like to stick myself to particular universe that I've created. For example, you are a trader now. There are times when you're trading into the equity market and you go on and buy everything that is available out there on the basis of news, on the basis of recommendation by your remiser or your broker, or a few channels out there, maybe on Telegram, maybe on WhatsApp, and some insider news that has been given to you, and you buy that, you hold that. I've seen many clients sharing their portfolio, and they're having stocks of companies which have actually closed, or they are having stocks of companies that are not performing well in a market which has seen a very good return in last 1.5 years. So that was the basic idea. So you need to understand, you need to create your own universe out there. So maybe sticking yourself to few large caps, few mid caps, and few small caps, or sticking, for example, I'm a uh, big fan of futures market, so I particularly trade in futures and CFDs. So if you're talking to me, I'd like to trade crude palm oil and FKLI derivatives, futures. So uh, I stick myself to that, and I don't go out there and trade based on hunch and news. So this was the basic slide that how would you interpret at the market. You cannot look at this particular line and you cannot analyze it. I mean, it's just one straight line, right? So but you can interpret this line. So the basic idea was that we need to understand ourselves as an human. We try to look at patterns, right? So this was actually a Bitcoin chart I used in my PPT, and this was somewhere around 7,000 odd levels, and this was 16,300, and it came down to I think 12,000 right now. And okay, so this was the basic idea of this particular line, that you need to understand that when there are two information available to you, that is price and time, you can certainly ascertain the behavior of the stock. What kind of a trader are you? What do you, where do you see yourself into the market? How do you see yourself? Are you a gambler? Are you a gambler? Are you a person who bets into the market? Are you just trading in the market based on the luck? But basic idea, if you are falling into these three, you need to change the way you trade, because as a trader, we are engaging in, of course, buying and selling of assets. It can be anything, but we tend to hold assets for shorter periods of time and try to capitalize on short-term trends. That's the basic idea. Now, when we're talking about short-term trends, short-term periods of time, hold asset, we inculcate a lot of things that depend, like risk management, and what's the quantity side, and how much you're willing to lose. How would you add your position to a winning position? How would you cut your loss when the position is going against? Because all these rules are not applied when you're putting yourself out there on the basis of luck, or you're betting. When you're betting, but you don't cannot position size. Of course, in poker, we can apply a few rules, and then of course gamble as well. But the thing is, available information are available in financial assets, so it's easy to understand. So you must clearly have a line. uh, so this was it basically, and let me erase all drawings, right? So this is what the idea was, that many traders, we randomly set daily or weekly performance targets. That's a very dangerous approach. I want to buy Spac-Man, or I want to buy, say, Maju, and or maybe DNX, which we did recommended, and hold on to these stocks. But you need to define yourself. What kind of a trader are you? Are you a short-term trader? You need to focus on the best possible trade execution, and how well you follow your rules, your plan. Your rules and your plan, theoretically, it's a very long thing to explain, but you might understand that you have to have a proper risk management, stop loss target, whether you are a midterm or weekly or monthly, need to have a professional routine. It doesn't affect your daily life since you are out of the market most of the time and you are only having few positions. You have planned your trades, obey your rules, journal your trades. Though there were around like a few hundred people, and then I asked how many of you are journaling your trades, putting your entries or prepare an Excel sheet, basic Excel sheet of your trades, because that is one important part which I even do at the end of the day. It just takes like me, what, 10, 11 minutes maximum. And I try to put a remark on that particular trade. For example, well, we won't talk about a lot of trades, but like, for example, what was the reason that turned out this trade to be a profitable trade or a losing trade? So that is what we try to focus. So it helps actually in reviewing your trades, and it makes sure that you learn the correct lessons. So long term is basically semi-annually. You're talking about value investing here. You're talking about holding stocks like Public Bank or MS Steel or like P Metal, and holding on to these stocks maybe for a year or two, in case if anyone have. So that is like long term, and it is like one of the things where the noise is very less. So this was something related to the noise and how noise can be eliminated, and noise trading represents type of anti-information, hearing a lot of things on the market, hearing everything what your reminder says, hearing everything you hear on Telegram or WhatsApp, or based on any news that your friend might have given. So that is some kind of a short way to lose a lot of capital. So this was noiseless chart and usefulness and how to work, but these were the chart patterns that we were trying to discuss. And now let's come to one of the most important part.
Simpler than this.
And this was one of the webinar that we have held on, I think, November 23, and
which I would personally work
I
on.
hope you will be able to. Market was down. Market was down around 1720, and we did recommend it to buy. So I hope it's now what, at almost 1860, 1861 level. It went up to 1880. So I think that was a good time. We actually caught
more simpler than this.
So this was the particular webinar that we have heard, and that's why I request each and everyone to, anyway we have a webinar. So it's a knowledge sharing. It's basically a sharing of information, and in a more precise manner, that after markets, when everyone is free, when you are off the office hours, or at your ease. So basic idea is to um, share the information. Maybe we share a particular trading ideas that can help you achieve your financial goal. So we discussed a few sectors.
This is something.
So I'm changing that's not important. This was the level, and this is nothing but KLSC performance against MSCI Emerging Markets Index, and we were able 20th of November 2018. We tried to catch bullish rally, and we held this webinar on, I guess, what, 23rd of November. So that was one of the studies we shared with each and every investor, clients, traders. It doesn't matter. Important point was to make money. If anybody in case traded and applied the same, might have got 2000, 2500 ringgit. So this was the idea over there. Now there were certain sectors, there were certain specific sectors that we discussed, and which are actually performing, which are actually not performing, and how you actually invest when you're looking at KLSE market, or it can be Singapore market. But let's see, and basically the idea was to discuss, are you smart enough to identify where you're putting your money? I mean, right. So KLSE property as a sector has been underperforming since 2013. Oh, sorry, right, since 2013, and you know you can see the year over here. And since 2005 it has been underperforming. 2007 most people were trapped, it was underperforming. KLAC market is underperforming against KLAC market itself. So we are trying to gauge the performance of the sector over here as compared to the overall broader indices. Now, if the sector is not performing, if the sector is not able to outperform the KLAC broader indices, I mean that's a laggard sector, and certainly you don't want to push your equity into that sector. So this was the basic idea, and we clearly mentioned that this particular sector may not perform well in coming time. So anyone who has any property related stock things can outperform. I think you need to check again, because this sector has not performed since 2000, I mean 4 2000 13 recently. And any market which has not performed well in last 5 years, when we have seen one of the best bullish rally across the world, that cannot perform you know in any other market. If you're not performing in a bullish market, that doesn't make sense, and it means that you cannot perform in any other bullish market. So what were the sectors that were actually performing? And with that, we okay, let me just erase all the drawings. Right. So this was one of the sector. Consumer products was one of the sector which actually performed well in KLSE market. So if you have identified, I shared this particular sector since 2007. That is 2008. I mean that was financial crisis that happened over there, and since those levels this sector has actually performed well, and not to mention that it is still in an upward territory. So this is just a consolidation. I mean the trend is up, you got a higher top, higher bottom over here, and this is something that will go on to, I mean almost to zero point 0.5. It is currently at around 0.3637, I think. Not much should have changed, but yes, it may perform well. So the idea was to go with the winner. So anyone of you holding, you got uh, uh, any consumer product stock, and you might see it's a winner. I don't have to point out, but you can see the charts of Nestle. I mean, you can see what it has, or Unilever. That's a change traded in US, but you can see how they have performed. So one of those sectors that is going to do is consumer products. With that, we came on to one of the most important sectors, and that is what we industrial production. Now, industrial production in compared to KLSE market was in continuous downtrend. I mean, 1995, 2005 has been in a secular downtrend. I mean, okay, no looking back. But then you clearly see how smartly it moved up, how smart money actually came into this market. And you see, whenever there is a bullish market, the outperformers will do well. And this is the area of industrial production. Now, if you want to ask me what are the sectors, I think industrial production is one of the sectors that is performing well and may continue to perform well. So anyone having these stocks in the portfolio, you don't have to do much of a thing over here. You look at industrial production stocks, and this is one of the sectors that is performing well. But which stocks will perform, which stocks will not? Well, industrial production itself is a very big sector, if you look at, I mean, when you're talking about industrial production, it comes all this companies related to construction, maybe say uh, metals, or another company which are directly into production activity, are domestic, or you talk about hibiscus, or you talk about p metal, ma steel, so Supermax, rubber company. I mean, these are the companies that are actually doing well, and you could have seen their returns. I mean, people might, investor might feel like they don't have a winning stock. I mean, we need to understand what are the winning sectors actually. If the sector is strong, we'll get the winning stock as well. Sorry. So this is construction. It has been good, though in last few time it has seen a kind of a correction, and seen a downward move for 2017. So that's something which was worrisome. But I think this sector may do well, since the overall trend is higher, so we might see some kind of a buying coming in construction sector, but that doesn't mean it has already come. It means it may come and the stocks may perform. Now we'll see that later, how it is panning out and how the follow-up is. But overall the sector is in a bullish trend, but moves actually very slow. Since 2012 it has been up. This is another sector, plantation. I mean, though it has been a long time, this sector is in sideways, I mean, territory. When you talk about this, I mean, 2009. So, sorry, right. So it has been in a downward momentum, and since then it has been sideways. So the basic idea was to share to plantation that the overall trend of the you know sector is up. So only the fact is, there was a big rally since 2005 to almost 2009, and it has been in a sideways correction. Any breach of these levels in the plantation sector, I mean, this sector may do well, but it's not necessary to put a smart money into this sector as of now. I mean, since simpler the reason is, it might get into a consolidation mode. So you'll feel like at times that you're stuck. The stocks aren't moving, uh, and it's taking a lot of your patience. It's testing your patience. So the basic idea is that because the sector is in a sideways momentum. Crude, and certainly this is one of the sectors that is recently picked up and may do well. This is crude, comparing versus SP 500. You look at how it has actually given a clear cut breakout. I mean, over here, that's somewhere around quarter four of 2017, and since it has been up since then, I mean, from 48 $49 it went up to almost 65. It's still around 62. So any stocks related to oil and energy space, I think, should do well. The simpler reason is that crude oil is up, and all the no, there are three types of companies: upstream, downstream, and downstream, and there are oil marketing companies as well. But any company that has a, uh higher so any company that has a higher exposure to basically oil and energy space should do well, because the breakout is clear, and it actually very fresh. I mean, look at this consolidation since 2015 to 2017. So it's very fresh. We may see some more upside in oil and energy space. So that was it, and there were certain stocks that we shared. Okay, just a sec. So, what are the sectors that may perform well? Well, I've got it identified for you, anyone who's been here. and has been part of this webinar. Let's look at few sectors that I think will do well, and let's take a look at them one by one. Basically, we are looking at SGX, FTSE indices because uh, easy to track. They have a lot of volume into them and carries a very high weightage. So when you're talking about FTSE indices, we're talking about all the stocks and good companies that are coming there. So we'll start off with KLAC indices. So there are broadly, 27 indices, and when we're talking about 27 indices, uh, we're talking about almost hundreds of stocks. So basically, I have done a relative comparison of the sectors, and first sector that came up was basically mining sector, but it has only one stock in it, and that was Q Chai, and it was up today as well, gaining almost 18%. Let's look at the chart. This is Kuchai, and you can see, I think it was just Saturday we did this, and it's up today almost 18%. But the idea is that this sector may do well since the stock we have in this sector at this moment only this. Now, any pullback into this stock should be bought because the targets are quite high, and there has been a sideways consolidation since 1996 to 2016. Look at the breakout. Is it still fresh? Why? Because the consolidation has been of more than 20 years, and the breakout happened just, I mean, a few days back. So the overall, I think the target for this stock is way higher. Anyone who's trading into the market and looking at mining sector, I think this one stock should be on the buying list. But the idea here is you need to hold it for like maybe 2018. I'm talking about 1 year, 1.5 years. So it tests almost all abilities of a trader. When I say all ability, I mean position sizing, risk management, and money management. How to add more, how to initiate a trading position. So Kuchai is one of the stock, and it should be bought. I mean, the volume looks good. The volume is still here. You see, anytime this stock is at the lower level, it went up at once, but this time it's sustaining these levels. So I mean, once this stocks moves above its previous resistance of 2.83, 2.82, I think there are pretty much chances that it might retrace to this particular top that's over here at 4.23 and 4.39. So that's the possible target of Kuchai, but it might take some time, it might take a few months, but the upside is still very much strong. So that was first in the mining sector. So any sub industries of mining, it can be iron ore, metals, and steel, aluminium. It can be gold mining, it can be silver. Gold has been on the uptrend, and so any stocks that are exposed to mining. But this was one of the stocks that I discussed. So next sector which has been doing well consistently, I mean specifically when we're talking about mm, 2017 2016, for it's actually technology, and technology as a sector has actually performed well because few of the stocks that carries a very good weight in this particular sector based on their market capitalization, I'm talking about, are doing good. And first of them is NRA. I think many of you have heard it. 2017. Look at this, almost doubled itself. 2016, that's 1.57. That's almost 3.5. Now, what I'm trying to figure out, trying to spot over here. Look at this correction. I mean, okay, just a sec. Let me change the pen color for you guys. Mm, yes, one. That was a dip. That was a dip. I mean, you need to look at a sizable correction. I mean, of maybe what, 30%, 20%. Look at this stock gaining a strength over there. So, the current resistance in the stock is at 3.52, a close below 3.52. You look at any correction in the recent terms has been bought, and you see the upside. I mean, correction is lasting almost like 10 days, 20 days, 30 days, but you look at the fierce upside. 1, 2, 3, maximum 5, 7 days, it's up. This is it. 20 trading sessions after a consolidation of this much, it's continuously going up, and the recent correction as well. And now you look at the volume at every correction. You look at this volume over here. When the prices were down, the volume hit up, and over here. So all the dips are being bought. Second stock is Bitrox, and it has been doing well. I mean, it's from the IT technology space only, and look at this outperformer. So whenever there is a liquidity coming back to the market, I think these stocks are meant to perform well. Now you look at this particular three drivers down pattern over here. I mean, if you are any one of you are trading into the market, and over here, this was a clear cut breakout. You look at all, the secular uptrend of this stock. Simple higher top, higher bottom. Now the important point here is, again, you see the kind of consolidation, very small pullbacks, very small. It's either sideways or it's down, but down not more than 10 odd percent. The recent correction when the global markets collapsed, how beautifully it has actually retraced and came up higher. Now it's bound to go to 6.84, 6 point. This is a short-term view. So anyone who's been into the market, this one particular stock may do well. Another stock from the same sector, Unisem, but this is basically based on levels, so it needs a closing about 3.1, 3.101413 cent. It should use, this particular bottom to retrace up. So Inari and Vitrox were the other two sectors. Now coming on to one of the most important industrial production. Now, I mean, how many stocks are there? More than 213 stock in this sector. How do you, I mean, look at these stocks, or how do you try to assess? But let's look at first P metal. We did recommend this stock back in 2017 at lower levels, and at that point of time it was, uh, you know, uh, kind of cheap. But I think right now it's very, expensive. Look at the rally, and you look at this volume over here. I mean, someone may have booked, or someone may have accumulated, but volume at this and even sustaining the level, once it breaks 5.83, P metal may move higher and hit that particular 6 ringgit mark. Second is Harta, and it's been in a consolidation over here, but above 12.18 this can move well, but this is something very um, on the higher side, so utilize the dips. I would not suggest to buy on the highest price. One should be able to basically utilize the dips. One stock which I surely like in this sector is Supermax. It's going higher. I mean, any correction in Supermax, it's one of the rubber companies, and any correction to 2.5 to 2.53 should be utilized on Supermax. I mean, targets are all the way higher to 2.85 to almost 3 ringgits, but this one of the stock is surely doing well. And industrial production, when you know the sector, you know the stock. I mean, you hear people talking about stocks and how it is uh, doing good and performing well. Hibiscus is still a very bullish stock that is in the making, and has been in a sideways consolidation. I mean, but look at the performance, and I still believe that this particular stock can do well because the levels are way higher. I mean, 1.4, 1.38 cents. But you need to have that kind of a patience where you can hold on to a stock for maybe a few months. And so these are all portfolio selection stocks. These are not something which I'm asking you to go on tomorrow and add. Any dips in this stocks should be utilized. So hibiscus is one of the stock from industrial production sector. Kosan is another stock. You look at this chart, all of them are basically blue chip, and when I'm talking about blue chip, uh, basically the volume is there. So as a trader, when you have volume in the stock and you are in sync with the broader indices, your investments are good. You can look at many penny stocks, you can look at many uh, small penny wise counters. They can do well, but they can do well for a few days. I mean, to stay longer into a bullish market with a winning stock, you need to have the outperformers. And whatever the stocks that we are discussing are basically outperformers, because when the volume is coming into the market, these stocks are getting accumulated at lower levels. you know so you must understand that you are in sync with the market and you are having a upper hand as compared to other, because you are in a position where there is a smart money and not the weak money. See, after a correction in this stock, it corrected almost what 50%, and look at this correction. See, as soon as the stock corrected, you're getting a 50%, sorry. Right, so you're getting a 50% in a stock that has given almost a huge rally from all the way 1 ringgit to 10 ringgit, and you're getting it at 50%. It should have been a buyer, and see, the volume came in, so it's still up. I mean, this stock should do well and should outperform. And right, last but not the least, is of course one of the favorite sectors of mine, finance. I mean, without a doubt, the top three banks, Maybank, Public Bank, and CIMB. You look at their charts, all the volume. You look at the volume, these are the three banks that are seeing the highest volume. 3,50,000, 95,000, 97,000. And when you look at market capitalization, you need to look at Maybank or Public Bank or CIMB. Yes, there can be some of the banks that may outperform, you know, like I mean, uh, if you try to put it down on the charts, you look at, okay, first Maybank, I'll see. We raise all trying. Now, this is a very long term chart, you know. That's back when 2013 levels. Look at the outperformance of this stock, especially when markets were all down in February. Look at this stock, how it went up all the way, you know. So this stock may have some kind of a resistance at 10.8, 10.9, but the overall targets for this stock, I mean, are still very higher. And just for your info, let me give that to you in a matter of a second. So 11.5 to 11.55 prima facie is the feeling for this stock should be the target. So you know that's Maybank. You look at now public bank, when everyone was selling, markets were down. It's one of the stock which is giving a lot of wealth to client. And I mean, since February, the stock went down for maximum what? I mean, 1 to 3 days, and you see how it has came up. So it has even, why it's actually, because it has even surpassed is those 2013 2014 level, and this is one of the fresh breakout. Now even if you add up to the range, I mean, 23.9, 24 should be the higher targets. And I mean, whenever the buying is in the market, you'll see buying in these stock. It's even up today and has performed well in last 4 days. Market has returned, and since then these stocks have performed well. And same goes with CIMB. You look at this. That's kind of an inverted head and shoulder in making. That's the shoulder, and that's the head. That's another shoulder. So anyone who's been a part of the technical analysis and do its own studies, that's another shoulder. So when you are adding right, let me just mark it for you and you'll be able to understand. That's a shoulder, that's a head, that's another shoulder. Here you go. So that's the inverted head and shoulder. Now you add up to that. I mean, when you look at public bank and when you look at Maybank, they are hitting and breaking their 2013 and 14 highs. Now you look at CIMB. I mean, even at this point of time, once this stock breaches this 7.4, 7.5 cents, this particular top over here, so the target should be of, I mean, these nine. 9 ringgit should be the possible target. I mean, that is also, I'm telling you, conservatively. So, what are you going to take in 2018 is, I think, CIMB or PB or Maybank, but I still uh, like you to make sure that you keep your weightage on CIMB. So these were the stocks, and these are the top three basically sectors. First is technology, mining, industrial production, finance. Well, I've taken four because mining has only that Kuchai uh, as one of the stock. So you should be able to keep. And there's this one MPH B cap, and it's still in the making after a long downward move. The breakout is yet to come, but we are seeing a lot of nice volume over here. You know, that's one of the basic criteria. Volume has been dry, suddenly it went up in MPH B gap, and I think prima facie should come up to these levels, and then we'll be able to take a better call on this. So these were the stocks, I mean, which we have discussed. I mean, CIMB is one of the favorites from finance, while you talk about industrial production, uh, we have shared P Metal, Harta, Kosan, and so these stocks can do well in coming time. And hibiscus is of course there. And from technology, we've got Inari, we've got Unisem and Vitrox, and from mining, of course, the one and only Kuchai. And so these are the stocks that are there. If you have any questions related to anything, do start posting because we have a time foundation here. But let me take you very fast to Singapore and few indices of those market. And first is of course maritime. The shipping industry has seen a recent rally, and maritime and related stocks should do well. I won't be discussing stocks, but I'll be telling you three, four sectors from HGX. Second, and most important, is industrials. Comparatively, it has outperformed HGX and other sectors that are there. So I think industrials should be there in your list. And last but not the least, financials as an index. I don't think there is much to say. The one of the best and the brightest. Okay, right. Just a sec. Large cap and mid cap. Well, if you talk about, I think on the fourth number after financials, maritime, industrials, then comes large cap and mid cap in FTSE. I mean Singapore. But when you're talking about, I mean, indices and specifically Bursa Malaysia, I think, of course, they have done well. Now, let me put over here. This is a small cap. You see the kind of trading range it has been. I think just someone just mentioned like mid cap, right, Jason? So I think look at the consolidation. That is Bursa mid cap, a small cap. That is mid cap. So I think you need to follow the smart money now. Uh, you know, a lot of stocks can be taken out from these sectors, but I like to stay where the smart money is. And when you are invested in almost all the blue chips of the sectors, I think you are in sync with the market. I mean, you don't get beaten down that fast, or you don't get, you know, sold out that easily. I mean, these are the stocks everyone wants to keep in their portfolio, irrespective of any, any kind of sell off or any global panic. I mean, look, you have seen Public Bank, or you see Maybank or Pre-Metal, any kind of correction. Maybe that happened in August when there was a sell off, or maybe that happened in February, but the reversals comes in very quickly and the volume comes in very quickly. So you have a feeling that you are with the smart money, and you don't get sold off that easily. So I would like to stay with the leading stocks from the sectors. If you have any more questions, do you know start posting. And this is KLCI, and that's what I particularly shared back in MY as well. That which stock, which particular levels. This was a very good opportunity for everyone to add up at around 1800 levels. I mean, even I was expecting around, like, maximum 1840, but 1880 to 1840, and then just in a matter of 3 days it came back to again 1840. The breakout is imminent, and I have done this particularly study, and I'll be very honest. Sorry, forgive me for that. I'll be very honest, anyone who's been here and listening, that the targets on the upside of Bursa KLSE markets are higher. I mean, if you want to talk about in percentage terms, you're still 13-14% off the target. So, I mean, you need to accumulate the blue chips, because those will be the one that will be leading the rally, and you should be having a very nice portfolio. We'll try to publish a few reports on few specific stocks by the weekend, so that that can be disseminated as well. You can get in with touch with our associates or account managers, and they'll try to help you out. And someone just asked me view on FLCI, so I have answered that clearly. And Bursa derivatives futures, we're talking about crude palm oil, and when we're talking about crude palm oil, let's look at well, crude palm oil has been in a sideways. You look at this particular level, 25.50, 25.60. This needs to be taken out. Once this is taken out, we may be heading towards 2700. As simple as that. 24.50 is a very strong support, and this is actually a double bottom formation over here. Sorry, just a sec. Yeah, and this is one of the downward moves that it has breached over here. So it needs to close about 2560. Closing about 2560 is where you need to take a buy call. I think 2600 to almost 2700 should be the target, but don't trade nakedly, and hold your position with proper stop loss. So in my view, I think 2470, 2460 should be the swing bottom where you can place it. So I hope that is it, and I have answered all your queries. It's almost 5:32. If you have any more query, you can uh, reach me, and you can share your ideas, or you can share your stock or portfolio, and I'll be happy to help. And we have our next webinar as well. We'll be sharing that too. And hope you remember the stock. I mean, MPH Cab, and from industrials, P Metal, Harta, Hibiscus, Vitrox, Inari, Kuchai, and hope you remember them, and trade them. CIMB, and few sectors from SGX are maritime, industrials, financials, and large and mid cap. But that large and mid cap is only in SGX. So I hope that is it, and thank you for your time. You can post your queries, and if you have any doubt, you can reach me at lsharma@epicresearch.sg. I'll be happy to help. So I'll end this webinar over here, and thanks for being part of it, and thanks for attending it. This was a great informative session, in terms of knowledge. We'll come back again sometime soon in a week or so to share further stocks. Thank you so much.